Live, and good morning to all. Got it, we're live. And thank you very much. Welcome to the Friday, the Futuristic Friday edition of Behind the Markets, where we talk about the future, all things to do with the people of Vernon's community, the youth, our youth, the future of this country. Some of us we are officially 1 year out of youth, so we are no longer actual exact youth. But yes, we are now middle aged officially. But yes, this is where we talk about all things to do with youth. And today's conversation, if you are below the age of 35, and you really, and even the ones above the age of 35, you're a policymaker, you're a leader to those who are younger, you may want to listen in because today we're going to be talking about in our Futuristic Friday topic of discussion the questions and the discussion we're going to have is building Africa's talent. Remember that we've been going on the series where we've been going through the talks and the panel discussions that have been had at Gateway at the Bloomberg New Economy Summit that was held in Morocco last month. And we've been going piece by piece through each of the talks that were there. So today we're talking about the talent, how to build young talent, human capital development. How do we turn our big base of youth into our biggest asset? There's a saying in the book, in the book, The Wealth of Nations, and Adam Smith, who's basically the godfather of all free market economics, states that the wealth of nations is found in its people. At the end of the day, the people are the greatest source of wealth. In fact, this is one of the reasons why even in the Bible it says, "What does it profit a man, Vernon, to gain the whole world, but to lose his soul?" That's a very important statement. So it shows that the people are your most valuable assets. We often undervalue our people, but today we're going to talk about how do we capitalize on our big youth. Just a quick statistic to remind people: Zambia is the seventh youngest country in the world. We are the seventh youngest country in the world. In other words, we have the biggest population of young people in terms of. We have the biggest population of very, very young in this country. So we're going to talk about how to do that, and then obviously we'll answer some of the questions. We'll talk about some of the questions that are brought up to us. Now, trying to talk. We do have a little bit of a comment here. Anyway, so let's get down to Futuristic Friday conversations here. Let's get into some of the market data first. First things first, we have seen the kwacha has lost a little bit of its value, down 0.68%. We've seen the dollar get stronger by 0.68%, and the dollar is losing value on inflation data in America globally. That's why we're seeing the rand trading as strong as it is. However, we are seeing that the dollar is up 3.8% in the last month, down 2.87% in the last 30 days, and 2.64% up just year to date. So it is a buying pattern for the dollar. Stock market closed quietly yesterday, down 0.4% on the week, and up 0.48% on the month, and up 12.14% year to date. And we have also seen the bond market yesterday was up 0.6%, so it's steady. It is moving 0.1 or 0.6%. That's where we're seeing the bond market moving. But in dollars, it was down 0.74%, mainly due to the devaluation of the currency itself. And we also saw that interest rates, again, took a little step down. Now, we are seeing that the rand is getting quite strong, 1.03. Remember that the rand was sitting much lower than this. Last week, the rand was 9% lower than it was. So if you're a cross-border trader, you're actually feeling it right now. Up 2.2% yesterday. So it is the dollar movement plus the rand itself. The South African rand is getting stronger, mainly because of the weakness of the dollar and the probability that rate hiking is going to come to an end in America because inflation is finally getting into target. It's getting to that 2 to 3% range, meaning that the Federal Reserve has officially done its job. So that's what you're seeing. So these are the lowest inflation reads they've had since the inflation fight started. Other factors that we're paying attention to as well in terms of all of this is also the future outlook of the global economy, which is projected to be less of a weakened outlook. Now, we are seeing that bonds up 14.26% year to date, and dollars up 11.919%, but interest rates are still up 0.53%. So we've still got a little bit of a high rate environment. With a globally high rate environment, we're not out the woods yet. It's just that the ship seems to be turning. So we are seeing that America has finished its inflation fight. Europe is heading towards finishing its inflation fight. It's only the UK which is stuck with elevated inflation. But the rest of the world, America and Europe, have all started to subdue their inflation, meaning that they're probably going to start adding stimulus to their economy, meaning that growth will probably be back, not next year, but the year after, because you're going to have a lot more capital moving through the system, and therefore global interest rates will probably start coming down. So once again, target 2025 even to start seeing interest rates coming down in Zambia. Now, in the commodities market, we did see that copper is back up to 8,700 on this news. Look at that spike that we've seen, a multi-month high on copper, up 2.25%. Copper is even back up year to date, 3.92%, up 3.94% just on the week. Unfortunately, on the flip side of things, so has oil. Oil is up 81.66, so you can expect a strong hike coming at the end of this month. So we may end up seeing a reverse, simply because now with less Fed rate hikes coming down the barrel, we're probably expecting to see oil prices probably going up, and also OPEC pulling back. However, there is still a slowdown in China that might curb that or may curb or cap that. But we are seeing copper is back up, oil is back up. So it is inflationary growth that we might see. But remember, in the long-term future, oil is trending downwards while copper is going to fly out. So this is where the last point where you're seeing copper and oil moving together. Between now and 2028, you're not going to see copper and oil moving together any longer, because copper will be replacing oil, because copper is the new oil. That is the way things are going to be going forward. But we did see that even gold was up a slight 0.17%. Bitcoin was up to one of its highest points we've seen in a while, up 3.9% yesterday, up to 584,362 kwacha, up 17% on the month, 81% on the data, and it's actually moved up back to 94% year to date. So we've got Bitcoin trending back where it was in the last quarter. Ethereum up 36,900, up 6.2%, also up 70% year to date, while gold is up 10.43% year to date. So we are getting some strength coming back in our wealth insurance assets as well. So at least you will see that you may be able to start taking some profits off of these. Now, here's where we're looking in terms of the broad asset markets: 14.3% on bonds year to date, 12.1% on the stock market, dollar up 2.6%, gold at 10.4%. Bitcoin and Ethereum up 94.4 and 69.9%. Remember what I always say, people: Bitcoin, Ethereum, these are tough assets to play around with because they are highly volatile. Do not hold the majority of your portfolio in them unless you are a specialist in that area. Otherwise, that's your risk to take. But if you're a novice, do not take a huge gamble on these. Now, this is some data also from Q2 in terms of where cross assets performed. Now, if you look at Q2, the green bar is where they were versus last year and where they were cross asset. What are we seeing? 7.6% bonds were up in the quarter. Stocks were up 5.1%. The dollar was down 17.5%. Gold was down 19.2%. This is just on the quarter. Bitcoin was down 11.4%, and Ethereum was down 13.4%. So you see what I mean when I say quarter two was a wash for these assets. Now, from where they were last year, bonds up 23.9%, stock market up 20.2%, USD up 3.5%, gold up 10.2%. And while we're also seeing that Bitcoin is up 59%, Ethereum up 86% from where it was last year. So this is how assets have performed when we're looking at the quarterly read. Now, in terms of our four horsemen, Vernon, we did see one of the biggest lead indicators. Now, I want everyone to also learn the difference between lagging indicators and lead indicators. This is one of the mistakes also we make in our country. I wish we tracked producer price index. This is a very important one. The reason is this: if you go to the manufacturing companies and you start to track the producer price index of products and also the import price index, we'll be able to start getting leading indicators of how the price of things are going to be. So the PPI is a leading indicator because it tells us if the cost of manufacturing products are going up, or the factory gate or wholesale prices are going up, then it's likely that the retail consumer prices are going to follow in the next month. So what are we seeing? We're seeing that US core and headline PPI have come down to 2.4 and 0.1% year on year. So what we're seeing is that PPIs are getting flat. That's a sign of, yes, slowing economic growth, but also that US inflation is continuing. So this is why you're seeing a strong rally. CPIs are in range and PPIs are still dropping, meaning that there is a lot happening here, especially core inflation PPIs at 2.4%. We also did see on the tough news is that Italian 3-year and 7-year bonds auctioned higher. UK GDP did contract 0.1% year on the month on month, and year on year it's contracted 0.4% from where it was last year in May. And also negative news that we're also seeing in the industrial sector is UK construction output was down, was for the month was down 0.2%, and year on year only grew 0.2%. You also saw US manufacturing down 0.2% and down 1.2%, while industrial growth both in Europe and the EU is down. So we're seeing weak industrial data, weak economic data coming out of Europe, and we're also seeing higher interest rates. But with the only good news is we're starting to see interest rates. So interest rates will probably result in more capital flowing, lower cost of borrowing, but things are still tough for a lot of people in the market. So let's, Vernon, get into our deep dives for the day. Now, deep dives for the day are showing in terms of deep dives for the day, and we'll be looking at some of the news, some of the questions that are coming out here. Deep dives for the day, we did see that the IMF board completed its first review under the 38-month extended credit facility, which Zambia is which is now providing Zambia with access to $189 million. Zambia's performance under the program has been strong. All quantitative measures, all quantitative performance criteria, and 9 out of 11 of the structural benchmarks of the review have been met, although they did cite that the public-private partnership bill has been set for the end of July to allow for stakeholder feedback and to be incorporated, and the target date for the implementation of IFMIS is committed to control module and has been reset to August. So this is where they're trying to look at actual structural changes that they have been looking for, and this is what the IMF are saying. These are the two things that were outstanding for them. So we do get a few questions coming out of this story. Walia Kangwa has asked, "Good morning. What will be the impact of the $189 million $189 million IMF funds released in the Kwacha release funds in the Kwacha? Secondly, do we expect bond interest rates to go down given that inflation stability globally and the possibility and possibly offshore investors coming into our market?" So here's what we should be expecting. One, the $189 million is, remember that part of that has to go to building of reserves, so it can't just get thrown into the economy instantly. They have got operational things that they do have to do, whether it's some of it is fertilizer that needs to be purchased. Remember, we're still short on some of these things. There's medicine that needs to be purchased internationally. So there are things that they have to do with that money. So they can't just throw it all into the market to fight off the Kwacha and to fend off oil prices going up. So that's part of it. The only main thing that you will see is that the government will not be on the buy side of the market. What usually pushes the Kwacha weaker is the government is on the buy side of the market. Okay, so in other words, the government is actually going into the market through the Bank of Zambia, is actually going into the market to buy dollars from the banks. And that's usually what pushes interest rates up. And usually when the government is facing that, that's stress, like trying to make debt payments. So they usually, when they're trying to make debt payments, they've run out of dollars and they're trying to go into the market. Currently now, their mining taxes can handle their bilateral creditors. So now the only thing we're waiting for is what is expected coming down. Now, are interest rates expected to come down in Zambia if we're going to get offshore investors? Remember that we have worked out one part of our interest. We have worked out one part of our debt. We haven't worked out the second part. So when we finish working out the second part, then everyone has a clear picture of what's going on. So bondholders negotiations, which have just started, this is what's going to allow us to then get re-rated. However, Zambia's re-rating is still going to fall below the B- grade. Now, B- grades, according to S&P's outlook for Q3, are expecting 34%. Now, I've been looking at even our bond, even our secondary, our euro bond market. The 2027 euro bond is currently trading at an interest rate somewhere about 35 to 40% currently at the moment. The 2024 one is trading above 100% because that thing is just flat out in default. But the 2027 one, which gives us a much more broad intermediate look, is trading at currently about 27. Is currently trading at about 30 to 35 to 40%. So what you're still seeing is that the appetite for low graded assets is still high interest. Okay, so we have not got them coming in, but what that may do is it still may bring the offshore investors into our market to bring down the currency later. Remember, they still have to buy up bonds, so they're not buying up bonds yet. And also remember that the government, the Bank of Zambia did pass a new rule that also did say that offshore investors are restricted to 5% of auctions and can only buy on the secondary market. So that also tells you something else. That restriction does not allow them to instantly flood the auction zone in order to bring the interest rates down. Interest rate movements are going to take a bit of time, given that we're in a globally high interest, high risk environment. We're still in a high interest, high risk environment globally. So that should answer that question. Other question that has come in from Wheeler, which is also lining up to that: why is the kwacha not appreciating despite the achievement of debt restructuring? It's at 18.4%. Wheeler, because these things are not instant. One, we're still waiting to deal with our private creditors, and two, I think everybody in Zambia has to slow down their expectations of the changes. Yes, we are saying that Zambia is on the cusp of one of the fastest and greatest wealth cycles. It is not something that happens as quickly as you switch on a microwave. It is going to take time. Interest rates come down gradually. The exchange rate stabilizes gradually. These things happen gradually, and they happen in stages. So the first thing that is going to first have to happen is we're going to have to conclude our creditors speak. We're also going to have to wait for the world to slow down on its interest rate cycle. And then we're going to have to get the rush of capital that's going to come in. It's still going to come in at high interest rates at the beginning. Then gradually, when they start to see Zambia's situation is safer, it's going to start coming down slowly. Okay, so even interest rates in the last time we had a debt restructuring took about 2 to 3 years to take off. Okay, so I think everybody has to kind of understand that these processes are gradual. They also give you time to start positioning yourself and start working in this. Other question we have from Sobopimi is what level of financial literacy in our country do you think we are able to support? Do you think we'll be able to support the appreciation of the kwacha? But it's not exactly tied to financial literacy. I think that I'm not too sure about the question. Sorry, with the levels, let me ask that. With the level of our financial literacy and kwacha in our country, do you think we'll be able to support the appreciation of the kwacha? Well, that's actually, yeah. I think, thank you. I misread that question. Yeah. The problem there is also that Zambians import too much. Our manufacturing sector, which thank goodness has been one of our fastest growing sectors, Zambians import too much. However, 2025 are some structural changes. So when are you expected to see a strong and stable kwacha? 2025 onwards, because that's when your inflow of copper taxes are expected to come in stronger. That's when your imports of fertilizer is now going to be out of the picture, because you're now producing domestic fertilizer. And that's when you're also at the same time, all of our debt negotiations are also in place. And also you've made structural changes between 2026 and 2029 to the cost of oil coming in. So lower dollar costs of oil, less fertilizer, and more copper inflows in terms of the price. That is what results in a stronger currency. You need to see the resurgence of export growth. Currently, we are in an export recession in Zambia. Export growth is what has to now trigger the real growth of Zambia's economy. When you go back to the 2004 cycle, you saw export growth at the strongest, 29% export growth in dollars per year for 10 years on average. That's when you'll start to see this full thing come through. So give it this year. There'll be slow growth this year. The growth will ramp back up. 2025 onwards is when the Zambian growth story kicks off. Okay, that's when it's expected. Let me not say it is going to go. That's when it's expected to kick off, and that's when all the indicators hold very strong. So in this 2-year period, don't sit, spectate, and wait. Actually get into the game. Start buying up the right assets and start building the right base. Go into your industries so that when the plane takes off, this is the problem of Zambians. You want to get in the plane when it takes off. You only want to start heading to the airport when the plane is about to take off. You need to be in the plane way before. You need to be at the airport boarding and getting into the plane way before it takes off. So look at what things are going to happen in 2025. Start prepping for them and start looking on the other side of it. So 2025, the reason I speak about it is because that's the takeoff of the EV market. That's the slowdown of oil. That's the pickup of our potential economic, the fruits of a lot of our policies. But only the people who are planting seeds now. If you're sowing dust, you will have dust from 2025. If you're sowing wealth seeds, you will actually start to see them grow, and later on down the line, you will actually reap them. So how do you actually start to do this? I always say three things, people. Get educated, get a simple plan, get started. Whether it's your money, whether it's your skills, whether it's your business. Get a quick education, get a simple start, get a simple plan and get started. Hopefully that answers some of the questions. Let's get back to some of the deep dives that we are seeing here today. So we should expect that some of those funds maybe will be used to stabilize the economy, but still we're on the negative side. Imports are growing relatively fast. Okay, so let's also, I think we have one more question regarding this, and then we're going to get back in. Samuel Bwalia has asked, and we do have to take these questions. When foreign investors begin to invest in government bonds at full speed, will bonds so bad that they will no longer be attractive to local investors? Bonds generally do not get to that level. Remember, Zambia still has a strong risk profile. So bonds generally still, even in the last growth cycle, bonds still performed 6% above inflation. So bonds, even, this is why I keep saying 95% of the years, bonds still perform above inflation at an average of 8%. Okay, at an average return of 8% throughout. This is a 21-year study. In fact, 80% of the months between 2020 and 2021, we saw bonds performing above inflation. And they only perform below inflation in some of the shock periods. So government bonds are very stable, but you still need to start rotating because the growth speed starts to slow down. They don't become negative. Zambia will not have negative interest rates, not anytime soon, okay, where our interest rates on our bonds are sitting below inflation. That's not likely, okay, not anytime soon. That requires a highly developed economy with excess capital. We still have shortages of capital in this country. There's still a global competition for capital. And I also do not see global interest rates ever going back as low as they were, negative and 0.2%. I don't see that happening as well, because the hyper-competitive environment of the world is not going to accept that anymore. And therefore, you will find that even the developed nations have become inflation sensitive again. So before they were not inflation sensitive, so they could just keep pumping cash into the system. Now the developed economies have become inflation sensitive. So even their central banks cannot just willy-nilly start pouring money into their economies any longer. So I think that is one of the things that we do need to start looking at going forward. So Samuel, I don't see that bonds will get to a point, but you do need to start rotating on people. Don't also clog yourself into one place. I tell people, start with bonds to build your wealth. Start there. But your wealth portfolio needs to be well and decently diversified between bonds, stocks, and retail property. That's an option. Also, unit trust. If you're not into retail property, you can have unit trust as well, but you need something that's decently diversified. All right, now let's get into today's conversation. Some of the other things. South African rand trades at the strongest it has over a month. Rand has now started trading at 18 versus the dollar. It was trading at around 20. This was when the rand was weaker. So the rand strength is coming from the fact that U.S. inflation data is signaling an end to Fed rate hiking coming soon. Here's some of the data we're looking at in terms of the Federal Reserve's rate interest. So in terms of the U.S. inflation rate, as you can see, inflation is starting to get back into range. So you can see that especially core CPI is still strong, but inflation is starting to get back into range in terms of the headline CPI. So 2% headline CPI, especially around June, that is what they're looking for. So consumer price index and core gauge is post the smallest gains since 2021. So basically, we're back at the point where we're before the inflation fight started. in those periods. Remember that the inflation fight really picked up when they started to see 4% inflation, and especially during the Ukraine war when fuel prices started jumping through the roof. But it was really a lot of the stimulus that was packed in. So once they get back to that 2 to 3% range, you will start to see the Federal Reserve probably reverse course, and it's on direction. You can see it in the PPI data heading forward. Nigeria's petroleum production is up 5.5% month on month and 1.25 million barrels per day. This marks the second consecutive rise in oil output and since the sub 1 million production in April 2023. So this is good for oil production because we've also seen Iraq and Iran pumping up oil production. Other news that we've seen in Africa, tech funding in Africa falls 37%. The full transaction value of funding in Africa fell 37% from 6.5 billion in July 2021 to June 2022 to 4.1 billion in July 2022 to June 2023. Nigeria's funding, which was the tech giant, fell 77%, which lost its number one spot to Egypt, which also fell by 25%. South Africa's funding levels halved by 53%, and Kenya fell by 69% in terms of the amount of private equity and tech funding that came in. Egypt is the only ecosystem that has more than $500 million worth of tech funding that came into its ecosystem for private equity. So you can see even these interest rates have really affected a slowdown in private equity coming into Zambia, venture capital and private equity coming into Zambia. Also, we saw the UK contract 0.1% and 0.4%. A continuously contracting economy and elevated costs of living are keeping UK citizens under pressure and even at risk of job loss. Simultaneously, the UK government did say that it's accepted pay rises for the public sector workers, but through government savings rather than borrowing or increased taxes, because they are refusing to now start creating fiscal space they do not have. Other news that we've seen in commodity news, Chilean mining companies are facing higher taxes and they're seeking faster permits and lower energy costs to help offset the higher taxes. Beginning 2024, mineral royalties in Chile will rise to a range of 8% to 26% of operating margins from a current 5% to 14%. So basically almost a doubling of the cost of tax that most Chilean mining companies. There will also be an ad valorem, 1% ad valorem tax on sales from miners that post a profit. So in other words, if you're profitable, you'll get Tobelad another 1% on top of your taxes. President Boric's government hopes to boost its total copper revenue to 0.45% of GDP, or about $1.35 billion a year, using these funds for things such as childcare, security, healthcare, and education. Now, unfortunately, what we're also seeing is that new projects in Chile are projected to start slowing down. So Chilean output in terms of copper mining is supposed to get to about 8 million, because they're currently below 6. They're struggling and they're trying to get themselves to 8 million, and they're also trying to get lithium out as well. But unfortunately, all these taxes are slowing down a lot of the new projects that these copper mining companies want to do, and they start looking at other countries to start going into them. Oil jumps on the US dollar as well, and OPEC is grandstanding on demand. The rally is primarily on the back of the extension of the 1 million barrel cut by Saudi Arabia, and also Russia's 500,000 export reduction. This is what Craig Helm said from Rwanda. But OPEC also reports the group's production rose 91,000 barrels daily, mainly due to Iraq and Iran. So even though Saudi Arabia and Russia had reduced, unfortunately, Iraq and Iran had offset that with increased production. And that boils down to some of our stories for today. Final comment that we have before we get into our topic of discussion is if we export more, our economy will be strong and our currency will be stabilized. That's insightful, and especially the part of sowing seeds of wealth or than dust. Thank you very much, Mwila, and I pray that you sow the seeds of wealth. But then let's get into our main conversation today, which is utilizing the talent of young Africans. And the question I'm going to post in the comments now for everyone is: Zambia has a 70%, 72% of Zambia's population, adult population, and about 85% of Zambia's total population is below the age of 35. Is this an asset we are capitalizing? Is this an asset we are capitalizing on, or is it an asset we are capitalizing on or wasting? Give us your thoughts. You'll see the comment, you see the question in the answer. Is it an asset we're capitalizing on, or are we wasting? Vernon, quickly give us your thoughts. Do you think that our population is something we're capitalizing on? And here's the other one: 72% of our adult population are below the age of 35, and also 85% of our total population are below the age of 35. Do you think with such a young population, we are truly capitalizing on it, or are we just wasting?
I don't think that's the situation we've got going on here. Twala, you'll agree with me that in a home setup where you've got children, ultimately two, three of them, you're likely and you pretty much expect them to be up and about and very active, and you expect most of the work, of course, to be done. And in a narrative where you see most of the people around are older folks, they still want to be around young people because they know young people are energetic and they get things not only done but done quickly. They've got more energy and more creative and whatnot. So I think when you take a good analysis around what the country looks like today, I think people will agree with me that we haven't really utilized the population, seeing that the majority is still in the bracket of, or rather, the majority is actually youthful, and we are seeing how the unemployment rate is like. And if you see those who are not employed, what they are doing, and of course, if you still see the ones who are still employed and what results, of course, or how fruitful they are, you'll understand that there really isn't much, of course, of what we've on being able to provide and be able to be able to benefit fruitfully from every nutritional value that, of course, the population can actually offer. And of course, with the labor perspective, we have what it takes. We have the energy, we have the people, we've got the numbers, but of course we are just not utilizing it as much. Some people, of course, will want to point out to say education is not very up to par. Maybe I was talking to a gentleman yesterday who was telling me he thinks maybe education hasn't been done as much in the country, and possibly machinery as well is not very available for people to be able to effectively contribute and, of course, be able to utilize towards maybe growth and whatnot. But we have the people are literally in the country, and whatever activities, of course, that can be implemented are there, of course, centered on the nation's development and, of course, personal development as well. With the numbers we are seeing, majority, of course, being young people. If you go in drinking places, most of them are young people. If you go in town, a good
That's the
number of them,
problem.
of course, are young people. You see, so I think we are not utilizing the population at all, and we are very energetic. We've got a lot of young people, and we are just not.
So take a look here, just to even compound on what you're saying. 35%, we've gone from 52% of Zambia's adult population in the labor force down to 35%. But take a look at the number of people between the age of 20 to 35. It's estimated, Vernon, that we are looking at a population that used to be 51.8% in the labor force, down to an estimated or targeted 29%. That means 7 out of every 10 Zambians between the age of 20 and 35 are not working. And they're not in school. Let's not lie to ourselves that they're in school, because the college going population is only 100,000. In other words, the tertiary population are only 100,000. People are not in school. So where are these people? Okay, I know a lot of them became cadres. A lot of them just dropped out of the workforce. So, and especially in the rural areas of our country, they just dropped out and dropped off the face of the workforce. And a lot of them, a number of them, also went into social benefit programs. Okay, because unfortunately, that's where they could see cash lying around. So we need to create an industrial base to be able to hire these people. And we're going to be talking about building on the youth talent of Zambia, because there's too much of one of the things that we're going to talk about in this Bloomberg in this Bloomberg talk that was happening is that, unfortunately, a lot of money goes to either very big corporate projects or grassroots, but it never goes to the enterprising middle. The enterprising middle, Vernon, who hire the youth, who create jobs, who create small factories. That enterprising middle is the group of people who actually uplift this group that you're looking for. So are we capitalizing on our youth? Not even in the least. And according to the trends, we are utterly wasting them, and it's getting worse and worse. So we need to turn this around. If you even take a look at a snapshot of young people, of the young adults, what you'll find, the economic status of adults in Zambia, formally employed, is only about 10%. Then informal, 18.5%. Unemployment is 5. Then you've got people who just stopped looking for work, and people who just have vanished. The one in brown is just the people who are not even categorized. They've just vanished. They're out of the labor force and they've just vanished. So this is the problem that we're trying to deal with our countries, getting our labor force organized and basically capturing the labor force of the country. Now remember, there is a national development strategy which is going to embrace on enhancing access to quality and equitable education. In other words, starting from early childhood education, primary education, inclusion, adult literacy, secondary education, curriculum development, HR development, infrastructure, all these things, along with improving vocational skills, which will also include things like digital skills, curriculum development, research and development, and then increased access to higher education, obviously through loans and scholarships, curriculum development as well, and private participation. Remember, we actually showed last time that higher education is mainly being funded by the growth in higher education is mainly coming from private universities and not public universities, and also enhancing technology and innovation. So trying to get digital skills development. So how do we get the skills of the future into our younger population? And now we're also talking about the World Economic Forum, which has introduced Education 4.0, where they're saying, yes, you should have schools where we are teaching information and we're teaching disciplines, but we need to add attitudes. We need to add social training. We need to add social enhancement. Now, here's my problem with all of this, Vernon. Where are the parents and where are the churches? Because parents and churches are the ones who are supposed to be doing this. No, seriously. I'm thinking, when we're doing curriculum, should we also come up with a national Sunday school curriculum to make sure that churches are also... it may sound wacky, people, but you may find this may be the best way to also implement it, to work with the Evangelical Fellowship of Zambia, to also start making sure that the social and soft skills, because we're talking about developing soft skills. People, that's what church was supposed to do. Church was supposed to develop people in leadership. Church is supposed to develop people. It's not, yes, it is a place of worship, but it's also a place of development. Okay, so I'm trying to figure out where church is fitting into this equation. And also parents. Parents are supposed to raise their kids to become leaders. Parents are supposed to also do all of this. So we can't just lump all of this on the education system, which already is failing to pump out math grades. Can we also can we have a holistic education approach that just does not only look at the schools, but also look at churches and looks at that also looks at churches and also looks at parents and how you can start to raise a lot of these. If people are having kids, are you training them on the things that on the newest techniques in raising kids in order to know that they should be raising leaders of the future? Because you can teach kids something and then your parents come and unteach them. Okay, you can teach a kid digital skills and then the parent goes and says, you just go and sell tomatoes. You can teach a kid, I'm telling you, you can teach a kid future skills and then the parents undo the work. So you want to make sure that the parents, the churches, and the schools are all aligned. And you're not just taking a school curriculum approach and an education curriculum approach, but you're taking a holistic approach. So I'm going to also ask this secondary question. Do you think parents and churches should be involved in the education, in the push for better education? Do you think parents and churches should also be involved in the development of the churches? Vernon, I would say give me your thoughts, but I think we are running a bit out of time, and I want to get through in these next 5 minutes. I am stealing 5 minutes here. We're going to try and get through this conversation that they had here. So the topic of discussion was these 5 skills here, these areas here: creating job relevant skills, investing in the youth, and also finding the biggest job creation sectors. They talked about tech, automation, and AI. They talked about digital penetration and youth monetization of those skills, teaching IT skills in schools, and bringing back trained talent from outside and remote work. So this is just a quick brief on where they went through with some of this. In terms of getting job relevant skills, they were saying you need to start investing in an enterprising middle. For example, Vernon, it is investing in people like Money FM who are middle class people who started a business, and getting them who started and who have now employed a very young workforce, okay, who in a country that has got slow job opportunities has actually been able to absorb them. So it's little companies or just growing companies like this that actually pick up a lot of the slack in the economy. We often try to create these big infrastructure projects, these huge corporation projects, or a lot of grassroots funding of direct cash getting to the bottom. But we forget that if you just invest in the enterprising middle, those people hire fellow youth. Young entrepreneurs hire fellow youth. So invest in hubs like that has been done by IBM, Mozilla, and others. So we've got innovation hubs in this country. Investing in those innovation hubs also helps them start to hire people. Entrepreneurs also become socio-economic leaders in society who encourage others to be entrepreneurs. So people who work for entrepreneurs also tend to become entrepreneurs, okay, because they get inspired by the person they work for. And we've seen that before. Even Monica Musonda was being interviewed once, and she talked about how working with Aliko Dangote encouraged her to also come and start something of her own. And that's what also made her start in the noodle space. So exposure to entrepreneurs working for them also helps encourage people to be enterprising. And also, as we said, too much capital is aimed at grassroots and so forth. Investing in the youth also looks at the creative industry. According to an UNCTAD report, the creative industry and cultural industry creates 50 million jobs worldwide and also employs more youth than any other industry. Okay, the 15 to 29-year-olds. So yes, young Zambians are in the events industry. They're DJing. They're doing all sorts of things, and that's where you find a lot of their employment can be. And in Zambia, the creative industry has grown between 10 and 11% a year between 2001 and 2022. So already it shows you. But we also want to be investing in soft capital. In other words, a lot of young people do not have tangible capital, but they have ideas. So this is where grants and empowerment funding is able to help them get their ideas off the ground and support their soft capital, the ideas for fashion, for clothing lines. This is where soft capital comes down. I've often talked about starting competitions for people to redesign school uniforms in this country. Those are things that we can do where you can actually get people, you can actually bring all the designers, whoever wins a factory, and from funding. Those are things you can do. The training and education platforms and flexible and agile capital. They also talked about the biggest job creating sectors where they actually highlighted that fintech, agri-tech, and green tech and edutech were some of the areas where you found that a lot of the growth was. But what you have to recognize, Vernon, is all companies are going to become tech companies in the future. So technology is extremely important in the growth of young people. Young people have to start becoming comfortable with technology. Whatever level of commerce you are doing, your growth depends on you being comfortable with technology. So technology needs to be something that's trained. People need to start embracing short courses, coding programs, and all sorts of other things. Added to this, Vernon, they also did say that we shouldn't be scared of the tech sector because people say, well, tech is going to eliminate lower jobs. Well, we need to also encourage and educate people to start doing higher cognitive work. But they did cite, Vernon, that apprenticeship programs also help guide people to thinking at a higher level, gaining soft skills. So the difference between a lower paid person and a higher paid person is not really the degrees alone, but it's also the soft skills. And then also, even when it comes to artificial intelligence, Africans also have to make sure that we're training people to start also programming some of these AI tools, because AI tools also have a race bias because they're programmed by people. They've also got a cultural bias because they're programmed by people. So if we're not feeding data into these tools, you will find that they miss a lot of our context, and therefore it doesn't become as helpful. So we need to get that coming in as well. Digital penetration and monetization, they pointed some of this out. Skills in e-commerce, Vernon, are extremely important. Skills in e-commerce are extremely important. Social commerce. I've seen people, I would tell this, Vernon, if I was running a private school, somebody like, for example, Susan Mulongoti, who has written 7 books in sales and digital commerce, I would have put her stuff in my curriculum. Okay, if I'm a school owner, I would have started training high school kids with that skill so that when they go to university and learn, they know how to create content. They know how to do social media business, because social media lowers the barriers to entry into becoming an entrepreneur. So if you want to also help that. But what they've also found, what we also need to make sure is that cultural goods are also sold using these digital penetration tools. And you also find alternative distribution channels. Online gives you a different way to distribute. So if you're a content creator, you don't have to pitch your stuff to stations and all these old infrastructure. You can literally just go on Facebook yourself and start your own podcast right now, utilizing your phone and a ring light that you bought. So it gives you alternative ways for those. But what they also said is, let's not overprescribe. As a government and as policymakers, focus on just making sure there's broad access to electricity and broad access to the internet. Because what they said is, look, don't overprescribe how growth should be and overregulate it. Just give kids the internet and electricity. Kids tend to be very creative when you give them the internet and electricity, because then they just start playing around with it. And then you've got what happens in Silicon Valley. So give them that freedom to run around. And also what they pointed out was teaching digital skills in schools also requires a STEM focus, but also, Vernon, teaching people to start doing a lot more short courses. Short courses, because of the way technology changes a lot of your skills are getting eroded. New features are coming into technology every day, every week, every month. Okay, Mark Zuckerberg has just launched Threads, which has 100 million users now. All of a sudden, one of my coaches in digital marketing is now just has been teaching us how to use WhatsApp for marketing. So things like that, mobile and edutech, and also getting back trained talent and remote skills. One of the things they really pointed out was that remote work will actually help Africa. However, one of the key points that were made in the conversation, and I wish I could have followed this, one of the key points that I wish I should have followed, and I wish I had more time to follow this, was they did say that one of the key skills that Africa is missing is not technical skills, it's soft skills and confidence. The biggest problem young Africans are facing is a lack of confidence. We are not able to negotiate properly, and we struggle in that regard. And that's part of what we really all need to work on going forward. So those are just some of the conversation points, but I do think we need to take a broad, holistic approach. We do need to take a broad, holistic approach. I will just finally get some of our comments. Thank you so much for some of these comments. And we'll say, honestly, we are wasting this asset, exploiting the lack of guidance and proper training, leaving them to alcohol and a lack of right tools. This opens up this opens up my mind to something we can set up: sports management agencies, artist management, and then we increase exports, especially in human resources, also in tech, also the tech world, and sponsorship for youth SMEs. Thank you. Those are some of the concepts that we do need to start looking at. And finally, I think we also have another comment from the same follower who has said, your point is valid. They should be implemented, while the churches play a vital role in shaping us. Unfortunately, youths are running away from church because the growth, leadership, and the life survival syllabus is outdated. People are giving up easily. We need to train our parents to remember that they are the biggest leaders. They are the best people to teach discipline and attitude and soft parent styling. The soft parenting style is not helping the sooner the churches realize that they have work to do. So thank you very much for this. We really have drained into overtime here. I know Vernon is basically clenching his teeth. But to everyone here, thank you so much for joining us. We wish you all a wonderful day. Check my page, and you'll see a lot more of this conversation that was had. And I'll give you also the link to the same forum discussion. So everyone, I wish you a wonderful day. God bless. See you soon.